What's going on, everybody? Michael Silva here for a special video preparing for the next big move in gold and silver. Now, if you've been on my channel and you've been watching recently, you know that I have been quite bullish on the precious metals. But as of recently, we've been seeing a trend heading lower. We're going to look into that trend and then prepare ourselves for the next big move. But before I do, I want to call out a couple of things that I've done previously. Well, on March 14th, right down here, we're looking at the junior miners. We can look at gold. It doesn't really matter what chart we're looking at, but I want to point out a couple of things. And why I'm making this specific video called Preparing for the Next Big Move. Well, right here on March 14th, I posted a video, as you can see, this little thumbnail. Do not miss this. This is going to be the best investment opportunity in 2020. And I posted that in regards to mining companies, silver, and gold. And we had some really big run-ups from that point. And in the video, I explained the reasons as why I started believing that. Then over here, on June 26th, I posted another video. It was a weekly watch list letting people know about the upcoming move for gold miners and silver miners, this bull flag that formed, and then from a technical standpoint, we broke out of that and saw some big returns in the precious metals. So the problem with those two videos was they came out just about at the time when the market was going to turn around or break out. So now I want to make sure that by putting out this video, I want you to see kind of what I see and prepare yourself for the potential next move that can happen in miners, gold, silver, etc. So when you zoom out, so you can see that the miners have been going down and down right here, and same with gold. But if you really zoom out and look from a big perspective, this is a chart of gold. And what you can see back here dating to 1995 was this large cupping type pattern. And when we broke above that, we really saw a big run up from, as low as 405, 445, that range. And we came up to make a high of almost $2,000. This right here was a 2011 top, and we'll talk more about that in this video, because then we started seeing this decline here and then kind of cupped back up. And now what we have is another cupping pattern. All right, and we recently made an all-time high, but since that point, we've been kind of trailing a little bit lower. So let's kind of zoom in a little bit and really see how we can prepare ourselves for this next move. What do we need to be looking at? Not just gold, silver miners, but what else can help us determine where the price action might turn for the best? Well, let's take a look at gold zoomed in on the weekly time frame, and below us is a chart of the 10-year yield. And what I want to call out here is in August, the 10-year yield bottomed out. If you look at this from an inverse correlation, what did gold do? Well, gold made an all-time high at the same exact time. And then since then, gold has been making lower highs and lower lows, consolidating downwards. We did break out just recently, but then that right there could be considered a bull trap where it traps people in, and then we headed lower. And as you can see right here with the 10-year yield, we've been putting in higher lows. So as this trends up, this gold has been trending down, which puts pressure on other commodities such as silver and even the miners. Now let's zoom out even further. So now our eyes are on the 10-year yield, because if we can find out where the 10-year yield might go, we might be able to find where gold might bottom. So if we zoom out just a little bit further, you can see here on the March 9th, we had this huge drop right here in the 10-year yield, as many of you already know. And I pointed the arrow right here because I want you to look straight up at gold. What was gold doing as soon as the 10-year yield bottomed? Well, it started consolidating sideways, kind of basing out here at a lower level of around 1450. And then you saw the 10-year yield spike aggressively up during that same period while gold was just basing out. But then look here, the 10-year yield topped out right here just below 1.2, and then we started seeing it fall rapidly. Well, what was gold doing when the yield started falling rapidly? Well, we saw gold really move to the upside. During this time is when I posted that video, The Best Opportunity. Well, gold had a run of 22% before it started consolidating sideways, and then once it broke out of that consolidation, which was the other video that I posted here in June, it went as high from the March bottom up 43%. You might be thinking, well, 43% is not that big of a move. It is in terms of gold, but I will show you what silver did, what miners did, what junior miners did as well. And as the 10-year bottom, you can see how gold peaked out there and started putting in lower highs and lower lows trending down. And now I highlighted two specific areas right here. Okay, you have this pink circle and this pink circle. Well, what took place during those two times? Well, look at right here. As it hit the lower portion of this trend line, we saw an aggressive move to the upside in the price of the 10-year yield. That right there correlates with this sharp decline. This means to me that if we see sudden movements, sharp increases in the yield, it's likely to see gold and various other assets connected to gold move down aggressively as well. And then we started seeing it consolidate, creating some of an ascending triangle. In this last, 4 or 5 days of trading in 2021, we're seeing a breakout of this ascending triangle, and you could see gold hit its area of resistance and now is aggressively moving lower. So we need to start looking at where the 10-year yield might go to, and we'll get into that. But this is important to also note. During that March bottom, how high did gold miners go? Well, from the March bottom, GDX, these are the gold miners, these are not junior miners, up 183% from the March bottom. So a big move in the miners. Junior miners were up 239%. So these are ETFs, all right? So the SILJ, which is junior silver miners, was 269% up from the March bottom to its peak right here just recently. So big moves for the miners. But if you look at individual miners, such as Silver Dollar Resources, which just recently went public, up 891%. Silver Dollar Resources is sponsoring this video. It's supporting my channel, allowing me to do this research, and we'll talk about them at the end of the episode. But I wanted to call out here is you can look at these individual miners and just see huge moves in them. Now with more risk comes more reward. And they typically, exploration companies, have more risk associated with it. So let's talk more about the yields here. We've been seeing the curve steepening right here. Why is the curve steepening? Well, the 10-year and the 30-year, they're moving up. And we have the short term, the 2-year and the 3-month, they're pegged down to basically zero. Now, in the December minutes from the Fed, they had this quote, "A gradual tapering of purchases could begin, and the process thereafter could generally follow a sequence similar to the ones implemented during the large-scale purchase program in 2013 to 14. Okay, that during 2013 and 14, I highlighted this area because during the taper tantrum, what did the rates do? Well, we saw 10-year spike incredibly up in a very short period of time. Likewise with the 30-year, that caused a lot of movement in the markets. And it caused the Federal Reserve to act. And in 2014, you can see that the rates started kind of falling after that point. So what happened to gold during that taper tantrum, that spike in yields? Well, we had a 30% decline from 2013 to 2014. So when you see these big aggressive spikes in yields, you got to pump the brakes a little bit here on gold. Now, my long-term view on gold is that it's going to go higher. I am bullish gold, I'm bullish silver, I'm bullish various miners. But you need to be aware of what's currently taking place as the market, as gold is heading lower. So let's look at another piece here, okay? So we recently, this is the 10-year yield. We recently, these last 1, 2, 3, 4, 5 trading days, we saw this breakout and it's a huge move, right? We're up almost 25% in the 10-year yield in a very short period of time. Make no mistake, that is a spike in the yields. So Bloomberg wrote a piece. And I'm quoting from the piece. I'm going to link it the article down below. It says, meanwhile, the median forecast among 53 analysts surveyed by Bloomberg is for the 10-year yield to end 2021 at 1.15. To end 2021. They didn't say to start 2021 because we're darn near there. We're at 1.13 as of the recording of this video. Another portion from that article, Jeffrey Rosenberg, they quoted him as well. And he said this on Bloomberg TV, 93 basis points, 100 basis points, 125 basis points. It's really about the pace of increase. The pace of increase that the Fed will concern itself with. So if you're talking about in the next 6 months, a gradual increase in interest rates, and by the way, this article came out, early December. I'll have it linked in the description below. A gradual increase in interest rates. I don't think that the Fed needs to react to that. What the Fed would be reacting to would be a very sharp rise in interest rates. And then he goes on to quote, certainly we saw that during the taper tantrum. That's the chart that I previously showed you from 2013 to 2014. They react to big moves. That's because that's disruptive to financial market conditions, to financial market functioning. You got to ask yourself, this right here, I mean, is that an aggressive move? In my personal opinion, yes, that is a very sharp increase. 25% move in 4 or 5 days. I think that the Fed is very well paying attention to this. And what kind of market disruptions can higher rates have, especially the long term? Well, first off, the 10-year and 30-year, when they go up, you typically see financials do better. Why? Well, financials such as banks, they borrow short-term, i.e. deposits, and they lend long-term mortgages, autos, and so forth. But you got to understand, if rates continue to go higher, which relatively, yes, they are still low relatively. However, with the amount of debt that we have, even this amount of a rate can put an impact on the economy, especially when you're seeing it move at a rapid rate. So if the 10-year goes up like this and the 30-year continues to go up, it's going to put pressure on the housing market, the auto market, and various other areas in the economy. So yes, let's zoom out now of the 10-year to kind of get a good idea, big picture, where are we? This is the 10-year on a monthly time frame. As you can see, yields have been dropping basically since the 80s, right? And with some peaks and troughs just along the way, just bouncing within this channel. And it wasn't until 2020, or right before 2020, that was right 2020, is when we broke down through this channel. And now what we're seeing here is a quick reversion back. Now, just so you know from a technical standpoint, once support is broken, it then becomes a level of resistance. So you have to ask yourself, are we getting back into this channel to stay there, or are we coming back to test it, maybe overshoot back in it, but potentially stay lower with the yield, which would be good for gold? And then there's all kinds of other things that we have to look into at some point when it comes to it, but is the possibility for yield curve control to come back from the Fed. Now, if we take a look at bonds, this is the TLH. Okay, you can look at this as stock charts. This is the 10 to 20-year bond ETF. I want to just call out here that they're in oversold territory. Now, they have an inverse correlation, right? Bonds, when they go down, that means yields go up. And we were tracking this on the daily market brief, right? We had higher lows, we had lower highs, but we're in this down channel. We have to be careful. And then we just recently broke down from this channel. Now we're in overbought territory. This happened previously, happened right here. And what did we see from this point, November 9th? Well, we saw a shot right back up. So being back in oversold territory, we might see something very similar take place. That could be a short-term bounce, but that doesn't mean the trend is completely changing. The trend here in bonds is currently, from August, is heading down. Okay, so that means yields have been heading up from August, have we already disclaimed. Overall, my long-term view, though, like I said, on gold, silver, like I have the physical metal, I own miners, and the reason why I do that is to hedge against inflation. And the miners, yes, there's more risk involved with owning miners. However, there's also more reward with owning miners. So I do delve into that space a little bit as well. But this is the M1 money supply. And as you can see here, just QE1, 2, 3, QE infinity, just a huge blow up of the M1 money supply. Fed is chasing inflation. A lot of people believe that deflation is going to come first, and then we're going to see a rise in inflation. With that, all that said, this is how we can prepare for the next big move. And that's by watching the 10-year yield, seeing where it might be running into areas of resistance, or how the Fed might respond to it. Because if we can find the top and then we all of a sudden start seeing it move down, we might be able to find a good spot to acquire more shares in the mining industry, or potential more physical gold or ETFs, et cetera, et cetera. So that's what I got for you on this. I want to thank my sponsor, which I'll talk about now, Silver Dollar Resources. What is Silver Dollar Resources? Well, they are a mineral exploration company. Now, mineral exploration and mining companies, yes, they are significantly more risky. But like I've already stated, when you allocate some funds to riskier assets, there's more upside potential reward too as well. And what I like about Silver Dollar Resources is they are backed by an investor, Eric Sprott. And the question comes, who's Eric Sprott? And most people know this is the Warren Buffett of the mining industry. He is known as one of the most respected self-made billionaires in the natural resource sector. And he owns 18% of the company and recently just invested 6 million Canadian dollars in a financing. But that's not the only thing that I like about the company so far. First, Majestic Silver also owns 16% of the company. And if you don't know who First Majestic Silver is, but you're a fan of gold and silver, I have a hard time believing that you would know who they are. They're traded on the NYSE. They're a dividend payer, and they're nearly a $4 billion corporation. Silver Dollar Resources' main flagship property, their current exploration property, is fully funded, closed $10.5 million in financing with lead orders from, like I said, Eric Sprott and First Majestic. And this is their project in Mexico. It's located 75 kilometers southeast of the state capital city, Durango. And you can see right here, that's the La Jolla. And then we have First Majestic. You have a couple other groups within that too as well. This right here is a quote from the president of Silver Dollar. And he's highlighting right here the main mineralized trend. He says the primary target of the 750-meter gap between the MMT, which is the main mineralized trend, and the Santonino deposit, where no drilling has been undertaken, it demonstrates the tremendous potential for resource expansion and will be a priority in our initial exploration campaign. Now, I'll get into the main technical advisors in this because that's a very important thing when it comes to mining. So that gap area that I was just talking about, that main mineralized trend, this right here is that 750-meter gap between the MMT and the Santonino deposit where no drilling has been undertaken. So it just demonstrates the tremendous potential for resource expansion and will be a priority in their initial exploration campaign. Silver Dollar Resources is publicly traded now. If you have access to the Canadian Stock Exchange, you can find them by just typing in SLV. They're also on the over-the-counter market under SLVDF. Here is the chart. From a technical perspective, I like the looks of this. Huge run-up, obviously, since the launch of it. And now it's been consolidating, basing out right here, right around from a base area of 140 to a high of 230. We're starting to see a little bit of a pullback. This mimics the price of what we've been seeing in gold itself. Now, the La Jolla project isn't the only project that they have. They had actually these two projects as well, the Long Lake project and the Pacwash Lake project. And this is by the Red Lake mining division. And the Red Lake area, it produced 29 million ounces of gold and has been producing continuously since the 1930s. So Silver Dollar's current projects are located approximately 30 kilometers south of the Red Lake, which you can see the community of Red Lake right here, and then you see the two mining projects. And then you see a little bit more zoomed in. This is the long-legged lake project right here. And then to the right of it, you have the Pacwash Lake project. Now, the last thing that I want to cover is the technical advisors. This is extremely important, just as important as looking at who is investing in the company, such as Eric Sprott and First Majestic. But Perry and Bud, these are both legends in the mining space or the exploration space, or more specifically, the Mexican geological sector. So they work for Silver Dollar Resources. And as you can see here, here are some of their big finds. And in 2010, Bud and Perry both received a pretty big International Mineral Discoveries Award that was presented annually. Now in 2021, the company will be drilling. So its ambition is to prove the economics and the size of the La Jolla resource and potentially even advance towards a PEA report. And the PEA report is a preliminary economic assessment. And that is very important to know when you're doing research on mining companies. So I'm going to link in the description below, to give you more information of what a PEA actually is. So just to wrap it up, I like the investors. Both Eric Sprott, First Majestic, they have a good technical advisor team. I want to thank Silver Dollar Resources for supporting by sponsoring this video. Keep in mind the risks that are associated with investing in specific companies, such as miners, exploration companies. I'm going to be having a disclaimer in the description below and then links to everything necessary to check out more information about Silver Dollar Resources. So I hope that helps. Everyone have a wonderful day, and I will see you on the next video.